So now I'm very excited to welcome to the stage Martin to talk a bit about the opportunity for stablecoins in Argentina through both what he's building with Mountain Protocol, but also through additional potential solutions. Martin, good morning.
Yeah,
Martin,
Zoom decided to execute an update in the middle of the call, Probably there's a PM that thought that the update was very, very important. Yeah. All right. Cool, guys. So pleasure to be here. I have a couple slides, and then I think we can go to questions. Let me share my screen for a second. I'm here to discuss stablecoins in Argentina. My name is Martin. I'm the founder of Mountain Protocol, but this presentation is fully kind of like my opinions, not representation of Mountain Protocol whatsoever. So let's go for it. So I wanted to start with this, right? There are four kinds of countries in the world: developed countries, undeveloped countries, Japan, and Argentina. And this was Simon Kuznets Nobel Prize in Economics, 1971. So we've been a weird country for a very long time. But weird is sometimes good because we can be in the frontier. And I think there's a lot of things that are not nice about being in this list, but there's also things that we can benefit ourselves from, which we've talked a little bit about in terms of like the resilience and the ability to innovate for Argentinians. And I think stablecoins are a key way to do it. Stablecoins today are 155 billion TVL. That is about 3 times the monetary base of Argentina. So there's 3 times more dollars in stablecoins than there is total money in Argentina, which is insane. And Argentinians, like, clearly stablecoins is the place where we like to trade. That is the entry door to crypto, USDT, USDC, via whether it's Binance or whether it's Buenbit, Lemon, that are going to be talking later today. And I wanted to focus on from a builder perspective, why stablecoins and why stablecoins are such a good product. And I think it comes down to 3 things. It's access to the best products globally, right? So it's services that are not available in Argentina, but that you can access globally. Reduce cost to serve, right? So the cost structure is totally different on a stablecoin versus their equivalent product, and in general for blockchains. And the last one is free critical features. So we're going to deep dive in each of them. Happy to take questions in the middle, if any. So the first one is you have the best global products, right? Like, blockchains allow us to create a product once and serve 180 countries directly. Maybe not 180 because you cannot serve North Korea, Cuba, etc., which are sanctioned countries, but every other country can be served directly by one single vendor. And you have USD checking accounts, which is the traditional stablecoin. This is where many Argentinians keep their kind of long-term savings, whether that's USDT, USDC. You have what Mountain Protocol is doing, my company, a USD savings account, which is very similar to a stablecoin, but offering yield based on US treasuries. You have gold tokenized by Paxos. You have backed finance launching permissionless ETFs. And I think the future is every financial asset will eventually be tokenized, right? Larry Fink, CEO of BlackRock, started making moves to that direction. And I think everyone in Wall Street agrees everything will be on a blockchain, right? So stablecoins are just the first entry, but they're a very easy one to sell, knowing that everything else is coming. So building infrastructure for this is amazing. The second thing is cost to serve. And I think this is, if you have not worked in banking, this is a little bit harder to touch. So I wanted to bring some numbers. My claim is Tether is the most profitable bank on earth. And if you look at the cost of acquisition of a customer of a traditional bank, it's, in the US, it's about $350. For a digital bank, it's about $6. So they are 60 times more efficient. The question I have for you is, what is the cost of acquisition of a USDT customers? They have millions of holders, probably tens of millions of holders, didn't spend $1 in marketing. So probably close to 0. The cost to serve of a specific customer for a traditional bank is $250 per year per customer, because you have compliance, you have things that you need to be updating on a constant basis, and everything is paper manual. Digital banks, they improve that significantly with digital processes. But in crypto, because everything is open and transparent, the cost to serve, the cost to do compliance, in my opinion, even more effectively than banks, it's substantially cheaper. And Tether has only 16 employees running their whole banking operation, serving millions of people with 100 billion in deposits. And lastly, revenue, right? Tether has 6 billion in revenue. That's comparable to only some of the larger banks in the world. it would make it a top 20 bank in the world. So stable coins, it's in general, but crypto more broadly have an amazing cost structure in order to provide services. I think that the value there is serving the people that banks cannot serve because it's not profitable. So banking the unbanked, and that's what many of us see in Argentina concretely. Finally, blockchains give us things that financial regulators globally look as key features, critical features, and like the UK, Brazil have been applauded globally for creating the regulations to give you these features, and then the blockchain gives them to you for free, compatible globally. So the first one is open banking. Open banking was a big thing in the 2010s. The UK, Brazil advanced in some of this. Honestly, no country has ever gone like to actual real global open banking. In crypto, we have open networks. We take them as a given, and it's compatible globally, very easy to get in and out. And that's why the products are so good, because customers can leave very quickly. The second one is compatibility, right? So if you're integrating a product from one bank to the other, good luck. You're integrating old mainframe systems, different versions, and so on. In crypto, we have the ERC20 standard, the ERC721 standard. We always agglomerate through standards that are followed globally. So the integration, I don't need to talk to a wallet to integrate USDM. I just follow the ERC20 standard and I'm integrated right away. That is an amazing feature for building on stablecoins. The next one is open APIs. So regulators have been pushing banks to create open APIs for sharing data for tax purposes, for fintech service providers, loan services. Banks are very reticent because, of course, data is power. In crypto, you have an API first approach, right? So everything you build has a read or a write in a smart contract, and all of those functions are public if they are public, or they're private, but you know who has access to those functions. So it's built with an API first mindset in line. And the last one is reduced cost of entry. Launching a bank costs about $10 million if you get a license. Very little number of licenses have been given in the US recently. That's the same globally. In crypto, you can launch a bank quite quickly if you want to be serving customers. And with a couple $100,000, you can basically create an app and start serving customers. So crypto in general and stablecoins in particular have huge benefits from versus the traditional system. And I think Argentinians have already started to see that. But the question is like, what's the real stablecoin opportunity? I think we all know about the savings opportunity, where Argentinians love to save in US dollars, and then stablecoins provided them an even easier way to save in US dollars. I like to think about it as you could go to the Cueva, that's the equivalent of going shopping, and then you can buy on Lemon or Buenbit, and that's the equivalent of Amazon, right? So it is the same product that you would be getting, but it's a lot better in so many different ways. And like reasonably, a lot of people have gone through that product. But I think there's a ton of others that are still to be explored further. Retail payments, I still have to see a ton of retail payments. We have credit cards or prepaid debit cards from most of the exchanges, but still retail payments is a little bit low. Mercado Pago is still the king in this. B2B payments, especially for external payments, there's a lot to be done here. And I think it goes connected to this opportunity around hedging. We have a very big agro business that is based on investing US dollars today to put soy on the ground and then selling soy 3-6 months from now at a different US dollar rate. And in the middle, we have a ton of expenses. Crypto can provide an amazing way of providing hedging for this. And I would love to see someone kind of combine the B2B payments and the hedging opportunity for that market, also the import market. And then the last one is loan collateral. So Argentina has a very poor lending system. We don't trust P&Ls. We don't trust the balance sheet that a SMB can provide. But a lot of Argentinians have US dollar savings that they could provide as collateral. There are companies like Aconcagua Finance where they're doing very similar to Maker, but off-chain, where they hold stable coins, and a bank can provide an Argentinian peso loan against a stable coin collateral, essentially kind of completely exiting not having to hold that collateral in an Argentina bank. And I think there are many more opportunities to explore. If those opportunities involve stablecoins in any way, I'm happy to connect, and actually very curious to see what gets built. So I'm going to stop there and see if there's any questions.
Martin, thank you very much. That was incredibly well considered, and certainly from my mind, the opportunities, the economic or potential economic impact is really clear. But what's the flip side of this? There are obviously some risks and challenges. You know, what in your mind needs to evolve in Argentina in order to realize the promise of stablecoins over, let's say, the next 5 to 10 years?
Yeah, I think the first thing is legitimizing the fact that you can have multi-currency, allowing people to choose. I think Milei's competition of currency mindset is the correct one. That is something that gives at least the ability to know that you're not going to get gone after for doing this, which is already a big step. I think providing regulatory clarity on stablecoins would be amazing. I think I've seen some proposals going around utility tokens, security tokens, and payment tokens, which would provide a lot of clarity here. And I think the last one would be providing even further guarantees around what a deposit is, right? And separating exchanges from custody and providing even, so reducing the risk of exchanges exploding, which I think can set us back significantly if that were ever to happen. And that would require also some kind of regulation. So I think innovators will innovate, but it's providing regulation to give certainty to those players.
100%. And final quick question before we draw to a close. What path for stablecoins would you ironically put your money on? Or like which do you think is the soundest for Argentina, right? Is it a traditional stablecoin? Is it an algorithmic stablecoin? Is it based on a basket of other goods or commodities or assets? You know, what is it?
Well, I'm super biased, but I'm gonna say USDM. That's the stablecoin we're building. We're building it with my grandma in mind. So where would you hold your dollars if you had to pay a life-threatening surgery tomorrow? What is the safest model that you can do? And we build everything. We're regulated at Bermuda, but we build everything with that in mind, and providing kind of like this savings account where you also earn yield while you're doing that. But yeah, that would be my answer.
Amazing, nice plug at the end. Fantastic. My grandmother will also be very, very excited to hear. Fantastic, Martin. Thank you so much for your time. And yeah, look forward to catching up with you soon. I think there's some stuff in the
All
chat.
right, awesome. Thank you guys for having me.